Elizabeth.
And I'm Vivian.
And welcome to the Entry Level Adulting Podcast,
where we help you to navigate the confusing world of adulting,
one challenge at a time.
Welcome, friend.
Hello, and welcome to the Entry Level Adulting Podcast. I am your host, Elizabeth, along with my lovely, wonderful, patient co-host, Vivian.
Thanks. Okay, y'all. Today we're talking about taxes. Your favorite topic ever. Paying the government.
Everyone's favorite topic ever.
Mm-hmm. Yeah.
I gotta admit, I was a little nervous about this one. As a CPA, I feel like I have to do this disclaimer, especially on this video. This is not professional tax advice. This is a sort of general knowledge how to approach doing your own taxes. So please don't take this as like professional,
the end all be all of taxes.
Yeah, I'm not like trying to get sued by the IRS or something, guys. This is just to kind of walk you through what everything means. And so to make you feel like more empowered when you're filling out your own stuff, you can be like, oh, I understand what they're asking for right now. Because I think that's what, at least for me, when I started doing my own taxes, was some of the most intimidating part was like, what are all these forms? What are they even for? Where do I even get them? Like, it just seemed like this really big thing. And then when I actually did it, it actually went a lot faster than I thought it would. So that's the goal.
You know what, though? But for the most part, our age cohort, right, do not have difficult taxes.
No.
Right? So our taxes are really straightforward. So this is the best time to start doing your own taxes, because the older you get, the more convoluted it gets, because in theory, the more money you make, and the different ways you get that money are more than they were when you were younger. So this is the easiest time to do your own taxes.
Absolutely. Yeah. So because of that, today we're going to go over how to do like your individual like 1040 easy taxes. And the three forms that you really need to know for this are your W-2, the 1040, and the 1099. And these are kind of the three forms that we're going to go over right now. So a brief overview, a W-2 is just the name of the form, same with the others. It's just the designation that the IRS has given that form. And a W-2 is going to be sent to you by your employer to basically give you a breakdown of all the money you made that year.
Right. And this form should be sent to you by the end of January. Like, they have to send it to you by the end of January. So January, February timeframe is when you should either be getting a notification or an email or a letter with your W-2 form. And it usually comes with more than one copy.
Mm-hmm. Yes. And so you should save this, not just for tax records, but sometimes for identification, proof of residency, like at the DMV, all those things. So you definitely want to save these just as proof of your employment as well. And so you get the W-2 form from your employer. It should arrive in the mail or email, and you have to download it depending on how your settings are set up. Another thing you have to look for is if you have a bank account or a brokerage account, which is like an investment account. Those companies like T. Rowe Price, a Fidelity, an E-Trade, whoever you're with, those companies should also provide you with a 1099, which is the form that breaks down how much interest, dividends, and capital gains you made during the year. And again, these should be made available to you typically on their website, and you have to go into your account and download them from the website. Same for your banks. The bank should also have those forms, and you go in and you download them. So those are your 1099s. And again, this is for your interest income and your dividend income.
The other thing, 1099s are also sometimes used for people who are unemployed, right? So they will also send you that form, right? Because you're getting this form, it's outside of a job credentialing. So 1099, there's different subclassing, but it's also for unemployment. So for people who are filing for unemployment during the pandemic, right? You won't necessarily get a W-2, you get a 1099-G, right? Which will be what you use to submit your taxes to the government.
And I could be wrong, and I haven't looked into this fully, but so everyone correct me if I'm wrong, take this as a grain of salt. You might also get a 1099 or need to fill one out if you are self-employed.
Correct. Yeah. Self-employed. They have a 1099. Sometimes it's also like a Schedule K1 is the other form. I think there's the other one. It's like miscellaneous and like NEC are the other two forms that you use when you're or self-employed. Also,
Mhm.
is one of the other credentialing, right? Because typically your employer is the only one who sends a W-2.
Correct. And so I think a Schedule K-1 is typically like if you have an LLC for your business, you fill that out. And that's kind of like the Schedule K-1 is the same idea of like how much you made during the year, how much as a partner you contributed, all that things. So that's like if you own your own business. But if like you're a freelancer or something and you haven't gotten to the point where you set up your own business for it, I think that's typically a 1099. So those are all just a bunch of fancy numbers. It depends on your situation, but the point is you're going to get whatever tax forms are applicable to the way you make money, and then you're going to fill out the 1040, which is like the individual tax return. And it's basically a matter of like plug and chug. Like you just take the numbers and you put it in. But how do you do that?
So, depending on your income, there's a couple different ways you can do it. Right? Everyone's heard of TurboTax or like H&R Block, but if you make, I think it's under 73K, you can file for either free or you only have to pay $10 on the state website and the federal website to be able to file for your taxes. Now, their website isn't as pretty looking or whatever, right? It looks like it was made in the 90s, but right, the information is the same as those other online softwares that you can use to file for your own taxes. So if you make below that or along that line, I'd strongly encourage you to use that form of filing, right? That way you don't have to pay.
Yes. I think what you're talking about is Tax Act. I could be wrong. Yes,
Yeah,
Tax
it
Act.
is. Mm-hmm.
So I just looked that up because I know I've done that one in years past. And it's if you make less than 65K right now and 73 if you're active military. So that's definitely a great option. But there's also I by research, I mean, I Googled if there were other free ways to do it if you made a certain amount of money as well, like if you made above that. And allegedly, TaxSlayer and TurboTax, and I believe Credit Karma potentially, I have to double check on that one, might be, if not totally free, very heavily reduced. So
I
if you
think
don't
I
want to
usually use
pay,
TurboTax.
yeah,
Like when we do it, my family, we all buy it together and we just split the cost because it allows you to file up to four people. So like my parents will file, I'll file, and my sister file. I think at the end I pay like $10 or $15 for my
yeah, for
taxes.
sure. So there's definitely options out there. I believe Credit Karma is one that I know my friends have used and had really good experiences with. I have not personally used it, but I might look into it this year. I like Credit Karma for other reasons. I've got great credit card recommendations from there, but that's a different podcast and also not sponsored. None of this is sponsored, guys. This is literally just us Googling like ways to file your taxes for free. So feel free to do that. You're on your own and look into which one is the best decision for you. Just know that that's out there. And what's great about these softwares is essentially they will take you through by asking you questions like how much did you make in salary, and you just go to your forms like your W2 form and you put in how much you made in salary and you just like input all these numbers based on their questions, and at the very end they will populate the form for you. So there won't be the stress of like, is this number in the right box? Is this what they're actually asking for?
Because you think you can also file for free, like on the paper. Let's be honest, we are not doing that in this generation. You can, but why?
An excellent point, Vivian. You can. But why? Because I guarantee you that's where most of the stress comes from is being like, I don't know where to put these numbers. I don't know what this box means. I don't know the answer to that question. And what's great about these softwares is they take so much of that stress away. And it's like, it basically breaks it
Mhm.
down for dummies. I'm a dummy when it comes to taxes. I literally studied it and I still feel overwhelmed by it sometimes. So I can't even imagine what it feels like for someone that didn't even like study this for years.
No, I think it's like one of those things that always stress people out, and that's why they put it off to the very end in April to be able to file. But one of the things I want to talk about, right, the things that I feel like we should address before you even file your taxes is about your
Mm,
withholdings, right? So this is the amount of money that you put aside, right, to say that you're going to pay taxes for the year. Now, I have one story of a friend. that decided that she wasn't going to do any withholdings because, right, you have that option. And then at the end of the year, she had to pay 20K in taxes all at once. Yeah, yeah. You see? So, I strongly recommend, so for people who are self-employed, right, budget that out. Figure out, typically the range for withholdings is about 10 to 20% depending on your income. And there's like a really easy calculator you can look up, and it'll tell you about how much you should put with your withholding going off of how much revenue you're anticipating. And every month you should be saving that amount. That way, at the end of the year, you don't get hit with this really big bill. Now, with that, with the self employment, it's also really important that you write off all the stuff that were business expenses, right, to kind of help offset that cost. So, if you're going to select not having withholdings on your taxing or you're self employed, it's really important that you double check that you have the correct amount for the end. Okay. The other thing is putting it too low. So if your withholdings are too low, let's say that you, for easy numbers, make 100K and you only withheld 10%, right? Typically for that range, it's supposed to be about 20. So you're going to have to owe another 10,000K on that at the end of the year because you didn't withhold it ahead of time. So if that's something you're going to do, right? Just keep in mind you're still going to owe that money at the end. And that's why taxes can be scary for some people, is that end number that they get hit with, but that's only if you didn't prepare for it. So prepare.
No, that's an excellent, excellent point. Basically, the government is going to get your money one way or another, so it's better to withhold more than less. Because if you withhold more, then you get a refund, and you're basically paying yourself for doing a good
And
job.
they will give it to
Yeah,
you.
and they will give it to you. And so, another point to being self-employed. Recently in LA, I've met several freelancers, and they're kind of talking about their experience trying to file their taxes this year. Vivian made a great point where, you are responsible for being the one withholding the tax withholdings basically for yourself when you're self-employed. So you are responsible for setting aside the amount of money that you will pay in taxes. When you are salaried in a salary position, this is not your responsibility. This is your employer's responsibility. So that's why when you're salaried, this might be the first time you've even heard of this. And that's because your employer is the one in each of your pay stubs, which we should probably go over in a different podcast on breakdown of a pay stub. But on each of your pay stubs, if you go look, you'll see like a federal tax withholding and a state withholding. And that is the amount of money that your employer is taking out for taxes based on your salaried income.
You can in some places, sorry, there are those three options again. Withholding, so no withholding, and then you can adjust the percentage depending on some. So just be mindful. You probably did it when you first signed on, and you can change it, right? But you have to be aware of where you are. Like I put 20% for me.
One thing I do want to touch on though is for anyone going through the 1040. I took a quick look at the 1040 last night. That was my 2020 taxes because obviously I haven't filed for 2021 yet. And so I just kind of wanted to touch on a couple things that I thought might trip people up for what would be confusing about that form. First and foremost is dependence. So typically at this stage of life, I don't know that
Right.
many people with kids, but if you have kids, they are a dependent. And so you get to claim them on your tax form. And so that basically means that you get a credit for that, and they're not gonna tax you as much because they know you have this expense of taking care of children. So definitely be claiming those.
I think the only issue becomes about custody. So if you are the person that does not have full custody of the child, you do not get to put that, I believe, as a dependent. It's the person that has full custody for those people that have children, but they are not the primary guardian.
Yes, no, that's correct. Basically, only one person can claim that child as a dependent, and in a custody situation, it will typically be the person that has the largest amount of custody and the primary care of responsibility of taking care of those children. They have to live. There's like a bunch of tests to tell whether or not that someone is your dependent. There's one where it's like the percentage of time they're living with you, et cetera, et cetera. You can Google it. It's basically broken down for you at on the IRS website. You can just Google like qualified child and qualifying relative. Like if they're not your child, but say you take care of full-time your elderly parent or something, they could definitely be a qualifying relative if they live with you and meet certain tests. So definitely check that out and see if that might apply.
Or people who have like again, maybe not so much for our age cohort, right? Because we're just so young, but like for people with special
Mm.
needs, right? After a certain age, right? They're technically adults, but the financial like burden or supplication that you have to put for them is more than it would be for a typical adult. That person can also qualify, but you have to look into it and see what else. I think it depends on whether or not they have how much income they make also.
Yep, that's a great point. Also, to note for qualifying child, like if you're in college right now, technically your parents can claim you if you're over 19 but under 24 and a actual student of a university. So if you are still being claimed as a dependent by your parents, then you don't need to file taxes unless you make more than like 12 grand a year, I want to say. And so definitely check that out because this might not be your year.
Yeah, like when you were doing babysitting, and if you did on the side, like I tutored and stuff in high
Mm.
school, I was not filing taxes for that. The amount of income I made, maybe $500 for the year.
It was so small, and honestly, at that point, the government does not care. They're like, "You can keep
No,
that."
because they're not gonna take any money from you. You're just like, what are we gonna do? $10,
Yeah.
$5? It's not even worth it at that.
They're literally not trying to rob babies here.
You and your lemonade stand at the side. You ain't hustling anybody like that, really.
Absolutely. Keep all that money. And that's a good point too to point out for side hustles. Like if you have this side thing that you're doing, you have like an Etsy account, you sell a couple things, you can claim some of that money and you can also expense some of that up to a certain point as a hobby. When you're filling it out, just definitely look at that. And same for self employment and hobby stuff. Keep track of your expenses and keep track of your income. It'll make filling out these taxes a lot easier. Charitable deductions. So, Vivian and I are both Christians. We believe in tithing. That's something that's important to us. But not everybody values contributing to charity. And I guess I'd just like to take this point to think about finding a charity that you do care about and want to support, because I think that's an amazing way to use your money in a way that's contributing to society.
Altruistic.
Yeah, altruistic. I get a lot out of it. I know Vivian does as well. I don't want to speak for you, but like I just think it's something that as a way to give back. It's not too early. We're not too young to start doing that. And even if it's something little, just think about doing that. And also with taxes, for the past year and this year, typically, in order to deduct your charitable contributions, you have to itemize your taxes, which we will go into in a minute, I promise. But for this year, you don't have to itemize in order to claim $300 on your charitable contributions. So if you've contributed $300 or more to charity, you can claim up to a max of $300 that they're not going to tax you on, which is great. Especially if you're filing for the standard deduction, because that's just a really easy box to check. And so when you have contributed to a charity, if it is a reputable charity, they will send you a kind of statement on how much you've contributed for the year for the purpose of filling out your taxes as sort of a confirmation of this is how much you've donated this year to fill that out. I don't know if it has a special
Goodwill
name or
does
not.
that too. I know for sure Goodwill does it. Like if you drop off stuff, they give you that little card thing. That's what we're talking about.
Mhm.
So even if they didn't send you like an electronic thing or something, that little ticket stamp, you're supposed to save it. So when you go and file for taxes, you can utilize that as like another way of like going into that charity block in the tax form.
Yeah. So any proof that you've basically donated, that's exactly what we're talking about. Again, I don't think it has a special name for the form. I could be wrong. It's literally just a statement of how much you've donated, and you can use that as proof of, your charitable contributions, which is great. Thank you for donating to charity. All right, so I think the next biggest thing that trips people up most, besides just like wages and how to, say how much you've earned, is the standard versus itemized deduction. And I spent so much time learning about this, it kind of makes me want to cry a little bit. But basically, in 2017, the tax law was updated so that the standard deduction was increased to the point where less people would have to itemize their deductions, because basically itemizing deductions is just a very fancy way of writing out literally everything that you could possibly deduct from your taxable income for the year. And I'm trying to break that down even more. So basically, the government isn't going to tax you on everything, because there's certain things like donating to charity among them that they want to encourage. Kids, all that things, home ownership. So there's a whole bunch of deductions surrounding these things that they want to encourage that they're not going to tax you on. And you get to basically take out the money that you contributed to a retirement or things like that, and you get to reduce the amount of income that they will actually use to calculate the amount of tax you owe. So that's what we mean by deductions, is that you're essentially like reducing that total amount. Everyone's probably seen the tax brackets. So if you can reduce that total amount and get into a lower tax bracket, the whole ultimate goal is that you're going to be paying less tax.
Now, for the majority of people, for the itemized, at least in our age cohort, again, this will probably not apply to, because
Mm-mm.
the amount of things that you have that are deductible are not even worth you filling out the time. You might as well just get the standard one. You'll probably get more of a deduction from the standard than
100%.
the itemized.
Basically, the bottom line here is save yourself the time, and it's probably not worth it to itemize right now, and you should just take the standard deduction. So, as I was gonna say, yeah, there's 2 ways to reduce that taxable income. There's the standard deduction, and then there's the itemized. And like Vivian was saying, the standard deduction is like, I wanna say 12,400 this year for
Yeah.
individuals. And so it's basically, unless you have itemized deductions, and you'll have to go through and, like, look at the list of what could possibly be. Honestly, if you're not super complicated and you don't, like, own a home and there's a bunch of other ones, it's not worth it, don't really bother. But, like, you know what? For your own sake, own information, I do encourage you to check it out, but, like, if it stresses you out, just know it probably doesn't apply to you,
It
right
stresses
now.
me out, so I don't do it.
Yeah, same. Um,
Mm-mm.
and I had to learn about it, so, anyway, there's the itemized and there's the standard. And so the standard is 12,400. And unless you have itemized deductions over 12,400, it is literally not worth it for you to do so. So you take the standard deduction and you basically check that box. And that's all you have to do is like, okay, I'm a person. They're going to reduce my income by $12,400. And so I'm not getting taxed on that, which is awesome. And then that's basically the last thing you have to do before your taxes are calculated. So they will check that withholding that we talked about earlier. They'll basically be like, you owe this much, but you withheld this much. What's the difference? Do you owe us money or do we owe you money? And that's how you find out whether or not you owe taxes or you're getting a tax refund. Is just the difference between those 2 numbers.
In short, right, filing for your own taxes is not as intimidating. There's lots of softwares, right? The government's trying to make it easy because, in theory, they want their check too. Now, oh, the last thing I want to put, do not put off filing to the end. The earlier you file, the faster you get your refund. Okay?
Get that
They
money.
owe you money. Go get your money. And look, if you've been withholding filing because you're like, oh, I don't want to do it, I think the government will keep your money for up to 5 years. After that, you just lose it. Okay? So if you were paying and you didn't feel like filing and the government owes you, they're not going to tell you, like, oh, hey, if you file, we'll give you money. You have to know that. So go get your money. Okay?
Yeah, and you need to file, like, ahead of April 15th is, I think, the final due date, but, like, why would you do it on the
Yeah.
actual day? That's a mistake, because God forbid
Horrible.
there's some sort of software malfunction and then you're late, right? So
Mm-hmm.
basically, I recommend as soon as you get all the forms you need to fill it out, as soon as they're ready, get them downloaded and then fill out your taxes somewhere in
I'm doing mine
March.
this week.
Yeah. Oh, you're already ready?
And it's February. Yeah.
Yeah.
Yeah. No, I like to get that out the way.
Soon as possible. And get your money. Get your money. That's like a plane ticket.
Right. I think the last year I did that and I got like my refund back in like 3 days. I ain't never seen the government pay anybody so fast. I'm like, dang, you guys are just waiting.
Yeah, and last year had, that COVID, like,
Mm-hmm.
credit, right? It was like $1,800. I was like,
Yeah, I was
"Yes,
like, let me whip that in real quick. Okay.
absolutely, I want that money."
Oh, the other thing that changed is that for people who were filing for unemployment last year, got an additional tax refund that is no longer being applied for 2021 taxes. So just be aware, you will not get your taxes from the 2021 in terms of your withholding for unemployment back like you did for 2020.
Yes, to sum up, your softwares and get your tax forms, and then you just answer the questions and it's going to fill them out for you. And there you have it. All right, good luck. File your taxes on time.
And that's our show for today.
Thank you for joining us. We'll see you on our next podcast.
We hope you continue to face adulthood head on. We've got this.
Follow us at Entry Level Adulting on Instagram, intro and outro music by @Deku_ on Twitch.
Bye, friend.